let's connect with our guests then. And we have Adrian Mowat now joining in, EM equity strategist. Adrian, and also joining in right now on the show, we have Matt Orton, who's the Chief Market Strategist, Raymond James Investment Management. Gentlemen, thank you so much for taking time out, just trying to assess the kind of mayhem that we witnessed on Wall Street and across the global markets, including our own. And today, the picture looking quite different, with the Japanese Prime Minister allaying concerns, saying that they're watching the market moves with a sense of urgency. Adrian, I just want to get in your take after having assessed and digested the kind of volatility that we witnessed overnight.
Yeah, so I think we're seeing a whole lot of clearing events. We had the VIX briefly above 65, something we haven't seen since the lockdown sell-off in March 2020. What's happening in markets is investors are being forced to do things. Forced to reduce their level of risk, forced to unwind their yen carry trade. And one just has to look at the markets to work out where we are in that particular move. So it is interesting to see the pop in Nikkei futures, and now the market's trading higher. The yen looks as if it might have hit a strongest point of 142. It'll be interesting to see if it can remain weaker than those levels, which seems to be the way it's trading at the moment. So I mean, you ask, have we digested what's all gone on? To be honest, the story is still going on at the moment, and we're looking at some, key factors. So as I said, looking at what's happening with the VIX, looking at what's happening with the yen, as the yen carry trade seems to be a big part of this whole risk-off event. I do, though, think, when we start to sort of extrapolate too much on the economic data, yes, absolutely, the US economy is losing economic momentum. But I would remind everyone that the Fed is at 5.5 on at the top of the band. They have an ability to cut rates quite dramatically if they need to, as they move back to neutral. And so we have a central bank, the key central bank, with a lot of firepower. And I think ultimately that's what's going to give the market a little bit more comfort.
Right. Matt, hi. How is it that you're making sense of the madness, and is there any method to it? Because one morning you wake up with a 10% crash on the Nikkei, and this morning it's up 10%.
Yeah, the whipsaw that we've been having across the board can certainly be uncomfortable. And I think it's important that we're seeing a bounce this morning, because when you look across global markets, this sell-off was certainly overextended. And I think what has helped it, comments from the Japanese Prime Minister certainly helped, just marginal positive data as well. We had ISM services this morning in the US, yesterday morning actually. And what it showed is that the employment picture isn't as dire as many people were thinking that it was, based off of NFP last week. And so I think that provides a little bit of solace to the market, that maybe we overreacted a little bit with respect to the data and took things too far. So what I've been telling a lot of our clients is that you want to be getting your shopping list ready, because we're going to go through a phase of indigestion in this market, but there's a lot of high quality pockets across global markets, in the US in particular, that have already reported earnings where you're seeing an inflection or continued strong free cash flow generation, really strong return on equities. And those are parts of the market that you want to lean into. So a lot of investors have been complaining that they haven't had an opportunity to put capital to work, to put some of the cash on the sidelines to work. Well, here it is. Here's the opportunity across a number of high quality assets that have been thrown out with the bathwater. So this is a fantastic opportunity to build a better balanced portfolio. You can still have mega caps, but lean into other parts of the market that are working both within the US and from a global perspective. So this, I think, is going to be a good opportunity long term to put capital to work and set yourself up for a better balanced portfolio moving forward.
Adrian, now we can look at yesterday's sell-off and say, okay, it was yen carry trade, it was uptick in geopolitical crisis, everything came together. But specifically on the yen carry trade, is there somewhere we can establish that the pressure of the yen carry trade is over, or it will continue to linger?
So we don't know what the actual positions are out there. So all you can do is watch what's happening with the yen US dollar cross rate. So that had hit a low of one or a high in terms of yen strength of 142. I think we're currently around the 144 level, and it looks like it'll weaken a bit today. And that will be encouraging. And just to add, I totally agree with what Matt's saying. We've got a good opportunity here building to put in place more balanced portfolios. And the US economy is slowing down. It does provide the Fed with some more flexibility for its policy. And typically, as the Fed starts to cut rates, move to a more accommodative stance, then that should be good for a broadening in the market, moving to perhaps more cyclical stocks, even though the economy is slowing at the moment. If the policy response is one that's supportive, then these more cyclical, cheaper stocks could actually do quite well. I would broaden that also to think about the emerging markets. Emerging markets don't like high interest rates and a strong dollar. If we start to move away from that regime, that should be more supportive for emerging markets.
Right. Matt, Adrian, both of you, thank you so much for taking the time out and speaking with us.